Welcome to Inside Hawai'i Real Estate. I'm your co-host, Will Tanaka, and right next to me is my wife, Leonie Lam. So again, my wife, business partner, and co-host. She's a broker and a 20-year veteran of the Hawaii real estate industry, also a former executive of two of Hawaii's largest brokerages. We are a husband and wife team and having the time of our lives. So let's get started, Leonie.
Thanks so much, Will. And, as you mentioned, we do real estate together as a team. We help home buyers, home sellers, and investors. And Will is also, he's a realtor, but he's also a licensed state of Hawaii attorney on top of that. So really the goal and purpose of our show, Inside Hawaii Real Estate, is to dive in together with you to talk about things that we as full-time realtors and our clients like to be informed about. And we are so excited because today we're actually going to be doing our quarterly discussion together regarding the current Oahu housing market. And that's usually the question that's on the top of everyone's mind. So we're so excited to cover this. And usually the first quarter of the year, traditionally in real estate sales, is a so-called slower or quieter time. And luckily for Will and I, we were very fortunate to be busy during the first quarter, but now the first quarter is over and we're into the second quarter. And what we're seeing in our current market is a lot of energy. We're actually seeing things kind of heating up, and we're hearing the same things about the market kind of heating up from our trusted partners on the neighbor islands as well. So it's not just Oahu, which we thought was really interesting. And inventory levels on Oahu are, especially in East Oahu, are still incredibly low. They're still creating a buyer demand because of the low inventory levels. And right now in the overall market, there's only 553 total single family homes on the market, and then 1,126 condos on the market active for sale right now. And then, we hear a lot about the median sales price in the news, in news articles and things like that. So regarding the median sales price for single family homes, last year we went down under $1 million. And I'm sorry, this year we went down under $1 million. So January and February, we were actually under $1 million. Last year it went over $1 million. This year we went under. But then in March, our median home sale price bumped up again. And so now we're over $1 million again at $1,083,000. And that's with 236 closed sales during the month of March. And then condos, interesting, the median sales price set an all-time new record high. And so condos are at 536,000 median sales price. And what the median sales price means is like they look at all of the sales that happen in that time period and they pick the one in the middle. So that's median sales. So that's just an indicator that the media usually uses and something that we always are tracking too. And there were 444 closed condominium sales in the month of March. So what does all that mean? Well, if we wanted to buy $1 million home, what would our monthly mortgage look like?
Okay, let me get my brain calculator out. $1 million mortgage. Let's say the conventional 20% down. Depends on your credit scores and type of loan. But when you include the property taxes and insurance, you're buying $1 million home. You're looking at approximately $5,500 a month.
Okay, $5,500 a month. And
right.
Does that include, that's just for the mortgage, is that right?
Well, for the mortgage, also the property taxes and insurance. So all includes about $5,500 a month.
Okay, but then I guess it varies, right? Because then it depends on if you get a certain loan program and things like that. But it's about $5,500 is what you're saying to purchase a $1 million home here on Oahu. Okay. What about condos? So if the median sales price is like $555, what does that look like in terms of a mortgage payment?
Okay, let's make it easy for my brain, Leonie. So let's make it 500 even. So if you're buying a condo for about $500,000, your monthly mortgage, just the principal and interest, is going to be $2,500 a month. Now for condos, there's always going to be maintenance fees, and there's a huge range between approximately $500 up to $1,500 a month just for maintenance. And for luxury condos, that's going to be much more. But for a $500,000 condo, maybe around $800 a month. and you include the property insurance and taxes, it could be anywhere between 3,500 a month on average.
And some maintenance fees don't include electricity, so that's going to be an additional amount that you would need to cover if it doesn't include it in the maintenance fee.
Yeah, so it really depends. Like, for example, in Kaka'ako, you have like the really old condo, the 1350 Alamana that was built in 1968. So, I mean, you're not going to get it for 500, but you could get a 2-bedroom for maybe about 800,000. But if you look at the maintenance fees, it's going to be $1,200 to $1,300 a month. And, you look at some of even the first luxury condo in Kaka'ako, Hawaii Tower. The 2-bedroom condo is going to be about $1 million. But the maintenance fees for that is going to be on the lower scale between 900 to 1,000 because you have the commercial space down at the bottom, KHON too. So that kind of offsets the other unit owners' maintenance fees.
So when you see like those condos in Kaka'ako that have the commercial spaces downstairs, whether they're restaurants or, different businesses, those oftentimes, are you saying that they would offset the cost of the general maintenance fee for the residents in the building?
Yeah, for example, one of the better buys, and this is in Waikiki, is called the Waikiki Canyon. So that's one of the ones that's not in a resort zone, but it's exempted, under the law. So they're allowed to do Airbnbs and short-term rentals. So because of the commercial space they have down at the bottom, plus they get a lot of money from parking. So traditionally, they usually have a very low maintenance fee, maybe around like $700 a month. More recently, there is a special assessment, but and I think that's why you really got to do your research. So not just the price point, not just the maintenance fees, but depending on the age of condos, a lot of them are doing the repiping projects, they're doing spalling work, and ever since the 2017 fire at Marco Polo, I mean, every apartment unit and condo, they have to do a life and safety inspection that's driving up the maintenance fees. So a lot to consider, when you're buying condos.
That's right. So, in our current market, how are you seeing, like, what do you think, how are things changed from 2022, so last year, over now to what we're currently seeing? I mean, in terms of buying power for buyers, and, I think this is good for both buyers and sellers to be aware of.
Oh, absolutely. So, both from a homeowner's perspective who's trying to sell, and also from the buyer's standpoint with the interest rate. So, for example, let's say $1 million property. Last year at 5%, let's say you were trying to looking for properties, right? $1 million, about 5% range. This year, let's say nothing has changed. You still have the same job, same financial situation. Mm-hmm. Now that the interest rates are over 6%, your buying power. So last year you were able to afford $1 million property. This year it dropped by 10% to about 900,000. So that's a significant
change. Yeah, that's a big change. Yeah, definitely. Okay, well, let's talk about some of the trends that we're noticing from being out in the field every single day, looking at property, meeting with sellers, meeting with buyers, and all of that. I feel like we're noticing a trend with listings, so active homes or condos on the market, where we're seeing price reductions in specifically in certain neighborhoods, right? And I think that some of those neighborhoods would be like anything kind of on the west side. We're seeing a lot of price reductions. That would be like Ewa, Kapolei. We've been out to Makaha, Waianae, and those areas. I think we're seeing that. And then, definitely some areas of Kaneohe even on the windward side, and maybe even a few in Mililani, like some of the townhomes that we've seen. What is your take on that? I guess, from what we've been seeing.
Well, there's definitely a shortage of qualified buyers in those markets, versus in town because of interest rates. For example, Ewa Beach or certain parts of Kaneohe, there's a lot of military VA qualified buyers. And, during the pandemic, VA loans were usually at least maybe like 1% lower than market. Now, they're all above 6%, just generally speaking. So in terms of the buyer pool, there's a little bit more inventory on the west side, and because of the limited pool of buyers, of qualified buyers, and the buying power, had dropped about 10% since last year. So I think that has led to just a little bit more supply than the demand.
I see. But then, here in East Oahu, we're seeing single family come on in desirable neighborhoods like Aina, New Valley, even Hawai'i Real Ridge, and the luxury space. And those are just going quickly still.
Oh, yeah, absolutely. So whether it's, Salt Lake, Maunalua, there's a lot of listings in Waikiki, but, when it's priced well, it does go fairly fast. Much faster than the 36 days on the market or the 24 days for condos. That's in the news. And of course, East Honolulu from Kapahulu all the way to Hawaii Kai, Kalama Valley. When they're priced well, you'll still get, 30, 40 groups at open houses, and it will go into escrow fairly quickly.
That's right.
And then you're getting, I think, because of the price point, you still get, the professionals and families who are not significantly affected by the 6% plus interest rates. So, but at the same time, they're going to be a little bit more discerning. They're going to take a little bit more time. They're going to look at specific neighborhoods and very particular, more than the last couple of years.
Yeah, I think we're also seeing an increased number of 1031 exchanges in this market.
Absolutely, yeah. But as much as it's going, fairly fast in certain neighborhoods, well, what is the average days on the market, Leonie?
So, regarding the average days on the market, and this is like an average across, all of the sales that have happened and everything. So we came from COVID days where it was like 9 days, for a property to come onto the market and go into contract. And now we're looking at something more like 36 days, on average for a single family home, and then 24 days for a condo. But that's a just average days on market, right? So in our experience, we're seeing, like I had mentioned, in certain specific neighborhoods where there's high demand and not enough inventory for sale, like in Aina or something, it goes a lot quicker even than that 36-day number for a single family.
Right. And you know what's interesting? Although the overall number of condo sales were down in 2021 and 2022, now there's intense demand. First-time home buyers or investors, they're actually looking at 1 to 2 bedroom units in secure buildings with parking and washer and dryer in the unit. So, those are, the inventory is still fairly low because of the increased interest. And although, prices have increased due to demand, even in buildings with high maintenance fees. So when a well-priced building and decent unit comes on the market, we would say, it still goes into escrow within about 10 days. And, many current owners who are hoping to upgrade to single-family homes are instead upgrading to a bigger condo unit instead. And we're also seeing an increased number of investors, like Leonie was saying, and 1031 exchangers in this market. And how about the buyers? What type of buyers are going into escrow right now?
Yeah, what I'm seeing a huge trend on in terms of buyers that are able to purchase in this market are tech professionals. So it could be like software engineers, or it could be someone in the security space that work for these larger tech companies. And so we're seeing a lot of buyers that are coming from companies like Google, Microsoft, Meta, which encompasses like Instagram and other things. And we're seeing those types of buyers in this market because I think what has happened is their companies have allowed them to work remotely from anywhere in the 50 states. And so those that like the coastal areas or like to be by the ocean or want a tropical setting, they're actually, or they want to come back home because maybe they were from Hawaii before. They're using that as an opportunity because they're able to work remotely from home, and they're really enjoying that. So they're higher income earners typically, so they're able to weather this higher interest rate and not as affected. But it still affects them though, but they're not as affected, I think, and still able to have that purchasing power, and they're looking to make Hawaii their home. And then there's also people in the luxury home buyer space that are looking, they're searching for the right place for them. they have time, so they're not in a rush particularly, is been our experience. But I think that there are luxury home buyers out there still. And then of course there's investors that, we've been helping to, and investors are looking for value deals. They're studying those price decreases with us. They're studying the market together with us. And they're looking for value deals where, they're probably going to come in with all cash or maybe a portfolio loan or something like that. But those are the kind of buyers that we're seeing right now.
Well, let's talk about, speaking of potential investment properties, I think one that maybe it's a little bit under the radar is foreclosure properties. Let's talk about that.
Foreclosures, yes. So speaking of investment properties, like, should we get into foreclosure properties? And that's probably, something that we want to talk about here. So, Will, what is a foreclosure property?
Sure. So, the foreclosure process starts when a homeowner fails to make the mortgage payments. The lender hires a Hawaii attorney to file a foreclosure lawsuit. The court appoints a commissioner. The commissioner does a public sale, and either the bank takes back the property, or there's a third-party purchaser. And the whole process, it could take at least 18 months, couple of years, depending on the situation. And of course, as a homeowner, you want to give the homeowner every opportunity to make up those payments if at all possible.
Right. So if a homeowner, like if I was a homeowner that was facing potential foreclosure on my property, is there somewhere they can turn for help, or what can they do to avoid that situation?
Oh, absolutely. Yeah. The first place any homeowner should turn to is their lender. Especially since the 2008 financial crisis, when, there was probably about 35 to 40% nationwide were facing foreclosures. Not necessarily, they went into foreclosures by short sales, deed in lieu of foreclosures. There was a lot of that. So one of the things that they impress upon the homeowners is, reach out to the lender to see, number one, if you could do a loan modification, to see if the lender would be willing to do a loan adjustment on your monthly payments and potentially your interest rates to bring the loan up to date by adding any past due amounts to the debt balance. I think that there's also a repayment plan where they temporarily increase your monthly mortgage to make up for the loan. In very extreme cases, they reduce or suspend your payments for a set amount of time. And you can also do short sales to avoid foreclosures. That's when the market value is underwater and it's less than what's owed on the mortgage. So the lender would accept the sales proceeds in exchange for releasing the mortgage lien from the property. And there's, a deed in lieu of foreclosure is like cash for keys. So there's different opportunities, but I think loan modification would be the most beneficial way for the homeowner to keep the property, not face foreclosure, and then to make up for the past due delinquencies.
So in summary, basically you're saying, if you're in that situation as a homeowner, then definitely turn and reach out to your lender, because there are definitely things that the lender can do to help you through that situation and potentially help you to stay away from foreclosure. But
Yeah,
that's
absolutely.
the important thing.
Absolutely, yeah. So you might have to reach out to an attorney, possibly, but try to work it out with the lender, because I think more so than before, ever since the 2008 financial crisis, they're more willing to work with the homeowners to make it right.
That's good to hear. It's good to hear. Okay, so shifting gears then, still on foreclosures, but just shifting gears. What if I was an investor, or potential home buyer, and I'm just thinking like, okay, I want to get into foreclosure sales. How do I find out about them? Like, or what is the mystery? Like, can you kind of tell me how would I find out about these foreclosure opportunities?
Sure. The easiest way is still the old school way. Of course they have it online, but newspapers. So on Oahu, it would be the Star Advertiser. On Maui, the Maui News, I think on the west side of the Big Island, West Hawaii. So you look in the legal notice section of the newspaper, and every Sunday, you'll see a whole list of foreclosures of, they may list when the open house is going to be, the property description. And oftentimes, I mean, before the open house, you're not going to be able to inspect it, but you might be able to just do a drive-by of the property, not go on the property. And then another way is, online. And then the third way is reach out to a real estate professional that you may know who's into foreclosures.
Got it. Okay.
So yeah, I mean, each attorney, you have to publish in the newspaper for 3 consecutive weeks before the public auction. So they're trying to give enough notice to prospective buyers, and then also a due process for the homeowners to, have the ability to try to save the home if at all possible.
Okay. So look in the Sunday newspaper, I guess that's
In the Sunday
probably
newspaper.
Okay, got it. And then in terms of like purchasing, so say I went to the Sunday newspaper and then like I went to check out the foreclosure properties open house and I'm like, okay, I want to purchase this property. It's perfect for me to invest in. Then would I be able to finance it, or do I have to?
So there is a financing option. So from what I've seen, it's usually a hard money lender or a portfolio loan with a local bank. For foreclosure properties, conventional loans are usually not allowed. And one of the reasons why is, you need to do an appraisal, right? Where the appraiser goes into the house to check the condition of the property and appraise it properly according to the neighborhood market value. And that's not going to be allowed for a foreclosure auction. So hard money lenders, portfolio loans, I've seen that as an option. Or cash is probably the most common way that people buy foreclosure properties.
Okay.
And, yeah.
So, okay. So then would you be able to share, what do you think are like the top 3 benefits to purchasing a foreclosure property? Because we get this a lot, right? People ask us about foreclosures and, if whatever. So now we know how to find them in the newspaper or online. And then we know that you'll probably need to come in with cash or a hard money loan, which is a whole nother animal within itself. But what are the benefits of purchasing a foreclosure property, you think?
Okay, so real quickly, right before we get into benefits, in terms of, to just kind of complete the process of, what goes into foreclosure purchase is, after you attend the open house, you have to go to the public auction if you want. So that's your option, right? So it's a 2-step process. At the public auction, there's going to be the commissioner. There's going to be, some people trying to bid on the property. So if you do bid, you have to bring a cashier's check that's going to be equivalent to at least 10% of what you're going to be bidding. So if you're going to be bidding, let's say a $500,000, right? Then you have to bid at least $50,000 in cashier's check. And then the next process is a couple months down the line, the court's going to set what's called a confirmation hearing. So that's when people have the opportunity to outbid the person who bid at the initial public auction. So it's usually a 2-step process for the public auction. And then if you're the lucky winner, then, you would have to close within 35 days after the final court order is filed. So, in terms of the benefits, I mean, there's a lot of great benefits. Number one is great value. When it's a foreclosed property, I mean, usually it's going to be below the market price. Oftentimes, it's going to be below the tax assessed price, right? So in terms of whether it's investment property or looking for your principal residence, I mean, it could potentially be a great value. The second benefit is it's a fairly quick closing process because once you get the court order, most court orders going to say you have to close within 35 days. So the buyer picks the escrow company and it has to move, fairly quickly within 35 days. There's times if it goes beyond that, then you would have to get court approval to extend it beyond the 35 days. And then number 3, great investment properties. I think there's a lot of people who either purchase a foreclosed property not in a very good condition. They'll rehab it, meaning they'll renovate it, put some money into it, and then they'll sell it at resale value. Some people might do that for a long-term investment property, make it into a rental property, if it makes sense for them. So a lot of these prospective bidders at public auctions, there's a lot of investors and flippers.
Okay, got it. And so, okay, so those are some of the top benefits, I guess, of purchasing a foreclosure. But what would be the top pitfalls of purchasing a foreclosure property that you would mention?
So when you think about foreclosure properties, you think about, okay, it's a great deal, but it's very risky. It's probably one of the riskiest purchases that you could make. So you can't just, not anyone could just buy foreclosure properties because it's too much of a risk. Number one, you're not going to be able to get a home inspector, right, to really find out, okay, what's wrong with the property. So that's not going to be allowed. The sellers, they're not going to do their seller's disclosures. So you're just really buying it as is. And oftentimes after you buy it, there's major unforeseen repairs, right? Because when it's foreclosed, I mean, it could be abandoned years ago. Sometimes there could be squatters. Sometimes, there could be a homeless person that the bank had to evict. So it's a lot of risk. So you really have to know what you're doing. And, when you're bidding, you have to have some cushion to make sure that you could cover those major unforeseen repairs. I mean, something, it could be structural. There could be major leaks. The roof might need to be repaired. I mean, it could be a complete tear down. So you might only have land value. So really have to be careful. And then title insurance. Just because you have a court order doesn't mean that you're going to get title insurance, especially if there's squatters, if the homeowners was not cooperative. So that means that the commissioner would have to do the public auction without holding an open house. Those may not be insurable. So if it's not insurable, then you're going to have an issue reselling the property after you do your renovations. So a lot of risk, and you really want to get together with a professional who's done it before. You don't want to go in blindly.
Yeah, that makes sense. I mean, because there's like this whole added cushion that you'd have to have for renovations because you don't know what you're really purchasing, right? Until you actually own it and you're able to get in and really see the condition and everything like that, right? And you might have been able to visit at an open house, but to really understand the cost that it's going to take to repair, and you don't really know. So I think I can understand that being difficult, and you definitely have to be astute in knowing what the numbers are and if it's really going to be a deal for you or not.
That's right.
Yeah.
So that's foreclosures in a nutshell.
Wow, we covered a lot. I mean, we talked about the market, we talked about days on market, we talked about median sales price. We covered, generally speaking, what we're seeing out in the field. I hope that was helpful. And then, we definitely covered this whole topic of foreclosures and whether, what the good things are and what the bad things are about them. But yeah.
So that was fun, Leonie.
That was really fun. Thank you so much.
And thank you everyone for watching.
Thank you so much for watching ThinkTech Hawaii. If you like what we do, please like us and click the subscribe button on YouTube and the follow button on Vimeo. You can also follow us on Facebook, Instagram, and LinkedIn, and donate to us at thinktechhawaii.com. Mahalo.